So this is a sample VAT return. Once you've completed your input tax and output tax worksheet and you have your totals, now you just need to simply input that information into the tax return. So if you are a registrant and if your turnover is under 1 million, then you will be on the cash basis. So that means that you will report the activity, the activity based on the cash you receive on the payments within the period for your services rendered. And on the input side, you would report the cash that you would have paid for any goods bought or services that were rendered to your company. Invoice method means that you report based on the invoices you issued, and that's whether or not you would have received payment for those. So typically for this industry, your services would likely be at a standard rate. So this return shows 7.5%, but we know the VAT rate is 12%. So you would report your activity on line 4, and that would be the VAT inclusive amount. The system is programmed to automatically extract the VAT and place it on line 5 of the tax return. And line 10 would just be the same output tax, the total output tax you would have collected. If there were no other entries, if you didn't have any exempt supplies or no other entries that would be taken into consideration on the output side. Now on the tax return, Part C of the tax return allows you to claim inputs on your imports. So you may have imported supplies, and on line 12 or 13, whatever is applicable, is where you would put the landed cost of those goods. This is a typical error that we see on the tax returns. People tend to put the invoice value, but it's actually landed cost on that line, and then line 14 is where you would put the VAT that you paid to customs. And this is how you claim your VAT back that you would have paid out when you imported those goods. Line 17, if you purchase any capital goods during the period, you would report that item here. That would be the value of the item, VAT exclusive value. And line 18 is where you would record items that you purchase domestically for operating use of the business. So any supplies, perhaps your utilities, you want to claim the VAT under the utilities for the business, this is where you would report the VAT exclusive amount. And the VAT that you paid for the period would be reported on line 19 of the return. So you would get if there were any imports, the total of those, the VAT paid on the imports and the VAT paid on your domestic purchases would then be netted against the VAT that you collected on the sale of your goods or the provision of your services. And so you would get a figure on line 27 as to what payable amount there is, what you should pay the government for this particular tax period. And that is what you should pay before the deadline arrives, or on or before the deadline. We always like to encourage taxpayers to file and pay perhaps a few days before the deadline, because particularly at the end of the quarter, the volume tends to get exceedingly high, and the system cannot handle sometimes the volume of taxpayers that wait until the last minute to file. And so we tend to get some calls to say, well, what's happening with the site? I'm trying to log in, I'm getting an error message. So we want to encourage you to try to file as early as possible. The period, the quarter 1 ends on March 31st. So you have the ability to file from the 1st of April to the 21st of April. So we want to strongly encourage VAT registrants to file and pay prior to the deadline to avoid any issues. So some of the common errors that we see is misunderstanding by the taxpayers really of what turnover is. And as Mr. Fernando mentioned earlier, you may have an individual who has multiple businesses. You may be a contractor, you may have a bakery, you may have a landscaping company, multiple businesses, and he is a sole trader. And so he may feel as though, okay, so I'm a contractor, under my construction business, I exceed 100,000, but my bakery is small, we're under 100,000. So because the construction business is over 100,000, he feels comfortable with charging VAT there. But because the bakery is under 100,000, he doesn't charge VAT on the cakes that he sells. And that is a part of the error. The individual as a VAT registrant, any business that individual operates, he must charge VAT because the individual is the registrant. So all the turnover for all of those businesses must be added together, and it's the total of those business revenue that is that person's turnover and should be reported for VAT. So VAT must be charged on the smaller businesses as well as the larger. So across the board, VAT should be charged. So incorrect treatment and reporting of VAT. So we sometimes get calls from contractors. They want to know what to do if they have to retain the services of a subcontractor. The subcontractor may not necessarily be registered for VAT. They want to know what should happen. So the subcontractor, if the subcontractor is not registered to VAT, the subcontractor should not be charging the main contractor VAT for the services that they provide, right? And failure to file a tax return. And as I mentioned earlier, this results in fines and penalties. So sometimes we see that contractors may be in between jobs, or it may be a situation where they may not have collected any payments within a particular period. So we want to let you know that regardless of what is going on in the business, a tax return must be filed. If there was no activity, if there was no payments collected, you must still file a tax return. So you would just report your revenue for that particular period as $0. And we want to encourage you not to make any side arrangements or any arrangements that may contravene the Act, because we get some unique situations. And so if you are not sure about whether or not what someone is asking you, if it's the right thing to do, or if it's compliant with the Act, please contact us and get some feedback from us before you enter into any arrangements, right? Because it could cost you in the long run. And I'll just briefly mention about the tax compliance certificate, which the department also issues. And a tax compliance certificate is necessary when you're doing business with the government. Yep. And it is required for individuals who also collect money for services rendered for the government or a public body, who wish to register ownership or change ownership of a taxable good, receive allowances under provisions of legislation. Now, generally the certificate is issued for a 6-month period. But if you have outstanding debt, or if you are under a payment arrangement, the certificate will be issued for 30 days. And as Mr. Fernando mentioned, we refer or verify with other government agencies the compliance status of the business. Road traffic, immigration, real property tax, value-added tax, business license. So that wraps up this portion of the presentation, so I'll open the floor to any questions.
I have 2 questions.
You talk fast, Harris. All right. I see you over here. Go ahead, Mr. Locker.
The first one is there any requirement or status that you need to be able to do between the monthly and the quarterly reporting?
Is there any other filing frequency? That's your question?
No, is there a particular type of company? What would be the difference between doing monthly and doing quarterly?
Okay, so the filing frequency is granted based on your turnover. If your turnover is under 5 million, then you would be automatically assigned a quarterly filing frequency. If it's under 5 million, if it's over 5 million, then you would automatically be assigned monthly. But if you are assigned to a quarterly filing frequency and you want to file more frequently, we can change you to monthly filing frequency at your request.
Okay. And my second question, it may be obvious to some people, but just for clarification, when you're saying that you're a VAT compliant company and you're buying supplies or importing supplies, either one, it has to be for your company or can it be personal?
Well, it has to be to your company. If it is for you, if value-added tax is a consumer tax, so the intention is for the consumer to absorb the VAT that's spent. That's why the business has the ability to claim the VAT back. If they are a registrant, the business has the ability to claim the VAT back on purchases made for the business. So if you even if you are a contractor, you buy materials and you want to use some of that materials to make repairs to your own home, the business should not be claiming the VAT back on those materials that you're using for your home, because that's a personal use of those supplies.
Even if you are a VAT register?
That's correct. So you, as if the business claims back the VAT on all of those supplies, then the business needs to show that. Just one moment. Then the business needs to show that as a transaction between the business and the owner. So the business is either going to sell that to the owner at cost or something, but the value-added tax on that needs to go back to the business or back to the government if the business claims it.
Yeah, but the business, how do you distinguish between the business and the person?
You distinguish.
No.
And then when we audit you,
If I am a owner, if I am a trader, contractor,
yes,
me, John Smith is a contractor. I am the contractor. I am VAT registered. I'm not a limited liability company. It is me, and therefore the person me cannot be distinguished from the contractor me.
right, but you have a business called John.
No. I'm talking about not a limited liability. I'm talking about if you're paying John Smith.
Yes, yeah, but you are John Smith trading as John Smith Builders.
Oh,
right?
Okay.
You are John Smith trading as John Smith Builders, and those supplies you use for the use to construct.
So you must be John. So what you are saying is that the business license must be clearly distinguished that John Smith is trading as something. We have several business licenses where that doesn't occur.
Well,
it doesn't occur. John Smith is trading as John Smith. It says John Smith. It just says John Smith. It doesn't say John Smith trading as.
But the business name is called John Smith. Let me help you with that. If you look at the VAT Act, the VAT Act speaks to something that it describes as a self-supply. Wherever items that were originally earmarked for the purpose of business is used or diverted for personal use, it is deemed a self-supply. That self-supply is then fully vatable. So she's quite right. what would happen is that in as much as you're John Smith trading as John Smith Enterprise, it is the reality of the transaction we look at. And if the transaction is one that we deem to be a self-supply, then we are going to assess you the VAT on it. Because this is how it is viewed. It is viewed as if you had sold that item and then taken the funds and went out there and purchased the item for yourself. Because if you had done so, you would have paid whoever you purchased the item from, the VAT. So that's the concept behind it. It's a self-supply, so it would be subjected to VAT.
Well, in my view, what should really happen is that the business license should be very clearly always have trading as.
Well, you see, the thing is this, that designation, whether it is designated trading as or not, for all purposes, and she alluded to, for example, an audit being carried out. When we carry out an audit, we look at the reality of the transaction. In as much as the business license may say one thing, we're looking to see what is the reality of this transaction. And when we do that, we say it's a self-supply. And if it's a self-supply, then the VAT.
So the VAT office will be the judge, jury, and executioner of that?
No, we're not the
situation.
judge, jury, and executioner. We make that determination, but we also have an appeals process.
Oh, so there's an appeals
There's
process.
an appeals process.
Right.
So if you feel aggrieved by a decision that we make,
Right.
there is the opportunity for you to first object,
Right.
all right, send an objection in, and then if you're not satisfied with that outcome, all right, there is also the appeals commission that is now going to be available to you. All right, and that's for all tax types.
Excellent.
Here?
Okay, so 2 questions. The first one is with regards to tracking if the person, the business owes monies within the government, and so just like NIB, et cetera, is Ministry of Works on that list? The reason why I ask that is that we have situations, especially when contracts, they go south. And so, for example, we might be able to, we hold retention on the project and we will be able to claim some, but there might be more that is due to us, but legally we cannot claim it because we've maxed out what we can legally get underneath the contract. Now, normally you would then go and you would go through the process to kick that over to the Attorney General and make that a legal matter. But my question is, even when you kick that over to be a legal matter, does Inland Revenue also track those type of cases to make sure that particular person gets paid back? And even on top of that, when you're talking with Ministry of Works, within all of our contracts, we have something called the right of set-off, which is that even if it's been deemed that you owe us money, if you enter in a contract, not just within the Ministry of Works, but within the entire government service, the government of the Bahamas has the right, in order to offset, to take that they paid out, they can take that money back from that the net contract that you have. So how does Inland Revenue track that?
We don't have, Ministry of Works the short answer is Ministry of Works is not on one of the agencies on that list.
No.
I'm not sure.
Right now, the Ministry of Finance has made the determination who will be included on the TCC list. I'm sure if the Ministry of Works makes a request, and I suggest you do that, have your PS speak to the FS and makes the case for it, maybe they can be included on the list for TCC checks as well. There may be a department that can come off and other departments can go on. We simply do agency duties on their behalf, on the ministry's behalf. So if it is warranted, by all means, I'm sure the Ministry of Works can be added.
There's just one other thing, which is also money related. So, which is that when we have, I wish I had an hour with you all actually.
You sound really bad. It looks like we will have a good conversation.
But yeah, which is that I don't know whether or not it's something that is a question, but more that is very interesting, which is that again, we deal with contracts, so a lot of our contracts deal with retention, so that they will and so the main concept is that there's a value of works done, and then after the value of works done, we take back our retention, and then there's the actual what is certified to be paid. So when a contractor does do the invoicing though, they invoice based on the certified amount of work. So you do $10,000 worth of work, but by the time that you certify the amount, it might be $9,000.
And now, if you've done $10,000 worth of work, then you would have to charge 12% back, like by contract, you have to charge 12% back on that 10,000. However, when the certified amount comes out, they charge VAT on the certified amount. So how do y'all deal with the discrepancy that happens there?
Go ahead.
Listen, if I understand what you're saying correctly, there's a difference between what the amount you're claiming and the
Yes.
final invoiced amount.
Yes.
Well, for all intents and purposes, you're only responsible for accounting for the final invoiced amount. What we're interested in is that is predicated on what you receive, all right, when you're in the cash basis.
Yes.
It doesn't matter whether you invoice to me for work, if you're on the cash basis, and you invoice to me 5,000, and I only paid you 1,000, then from a VAT perspective, all you're expected to account for is the $1,000 that you received. Now, if you're on the accruals basis, the situation is slightly different. You're accounting from the standpoint of what you've invoiced as opposed to what you've received. So really, it's a very simple situation. If you're on the cash basis, what have I received? If I've received X amount, then I shall account for the VAT based on the amount that I've received. If you're on the accruals basis, it's strictly based on the invoice. If there's a bad debt adjustment to be made further down the road, you can do that because the Act provides for that also.
So the long story short is, even though internally the contractor, they track how much of they're actually the value of works that they're doing, internally on their form that they submit to you, they can only do it based on the certified amounts that they've been receiving.
Yes, correct. Okay, that's all you need to do. So if there are retention monies that you collect, let's say the contract provides that the retention is paid 3 months, all right, after the completion date, all right, because they want to ensure that there are no material defects, etc. You do not have to account for that and the VAT and that until either A, it becomes payable, if you are on the accruals basis, or B, you actually are in receipt of it if you're on the cash basis.
Any other questions?
I just wanted to ask, I don't know if you can answer this or not, if you could expand on what he said about after death, the tax continues.
Yes, after someone passes or the company is in liquidation, there's what is called a probate process. Generally, that will say how the assets and liabilities, and so as you are getting rid of those assets, so after death, if I am Dexter Fernando, trading as Dexter Fernando in death, what is my family going to do with my company, right? You have no will, but you're outstanding some taxes to government. So once that goes through probate, of course, the government, the AG office, prepares all of the outstanding liabilities to the government. And so that might be government property tax, national insurance, whatever agencies. Just like a lawyer would say, I write the bank to find out how much, if my client on this day has any money in your accounts. And so once this is completed with the courts then states how much is outstanding to the balance government. If it cannot be reclaimed, then we go through the process of controlling some assets, maybe land values, and then at market value, sell that property, and then the family or the estate receives the difference of the transaction. All right? And just back to the TCC. Remember, the TCC's, the tax compliance certificates, just say to us, we are helping other agencies, okay? And as you said, from Ministry of Works, the level of the amount of issues or concerns might not be as high as the other agencies. Your point is well valid that there are some individuals that might have that understanding, but it also means that the Bahamas government AG office has been prepared a file that legally go after these organizations. So sometimes we can't interfere if you have legally went through the process of preparing the file for court. Okay? So the TCC is looking at a soft way of us handling it before we go and say, let's prepare to go to court with this person. Now you tell me, this person, we need that person, come talk to us.
All right, 7 minutes.
Yeah, well, what I found is that when it comes time, so what I found is that we have contractors continuously having to bring in a business license from the TCC, I'm wondering if it makes sense to have an online portal where we could just access that from the back end, rather than having persons physically bring that document to us all the time. It's just, the following up is just, it's a bit of a...
Payment certificate.
Okay, so, the onus is on the client to meet your requirements. It's easy for the contractor to get a TCC if he is compliant. He doesn't come to inland revenue, no one comes to inland revenue for anything anymore. Not a business license, not a tax compliance certificate, nothing. So it's a matter of that contractor going online, submitting a request, and within 48 hours, we respond to his request, and he emails that to you, PDF. He doesn't have to print it, he doesn't have to do anything, he can get it from his system, PDF it, and email it on to you. So it's simple in that regard. However, because the department wants to forge a closer relationship with especially some key ministries and departments that we do business with often, Ministry of Works, Physical Planning, Environmental Health, National Insurance, and the police, what we have started doing, we are trying to adjust our portal to give those agencies direct access for some of the things they need, and of course some of the things we need. So the thought is that when a person submits an application, you will be able to see that, and you will be able to do some response to us. We respond to you. So in a nutshell, that is coming. It is probably about 6 months down the road, but we do have our developers in, trying to build that platform to include, we call them the first 5. I mean, there are some others that want to be included, but we're trying to deal with the people who we deal with more regularly. Because right now, and we've done a lot to ease the burden. Right now, only new businesses we are now asking for requirements from you all for. So if it is a new business, then we are asking for environmental, physical planning, Ministry of Works, yada, yada, yada. But for renewals, we've done away with the requirements. So businesses coming in for business license renewal, they don't have to bring us anything except in relation to their turnover. So they have to tell us what their turnover is, and if it is over 100,000, they have to provide us with the accounting certification. That's it for renewal. So we're trying to make the process streamline it a bit. We have stopped doing a lot of agency duties. I don't think Environmental Health likes that, because we kind of held them to keep track of their inspections for environmental purposes, but we were trying to just make the renewal process. We figure if a business is already in our system, it means all of our sister agencies know about that. They already know about that business. So kind of the onus is on them to do their inspections. So just the new ones, we kind of are still coming to you to help us to be sure of who they are. So that's coming. Give us 6 months, and we'll be ready for you.
All right.
And just 1 second, and just to speak to, you mentioned something about the VAT certificates, them producing a VAT certificate to you. And that is important as well. But I want you to be aware that we have VAT on our website. We have the VAT registration listing, as we also have a TIN-only registrants listing. And what you need to be aware of is that the registration status of the taxpayer changes. So you may have a person who's registered for VAT now, but requests a cancellation from the department. They no longer wish to be a VAT registrant for whatever reason. Maybe their turnover reduced, or maybe they're out of business, something, right? But they may have been canceled. They're no longer a VAT registrant. When they were approved, we emailed that certificate to them, so there's no way for us to retract that. But the listing online is updated monthly, so you are able to refer to that list to check the status of a registrant at any given point in time. If you check any one of those lists and you find that the tax identification number that you're looking for is not there, then contact us and we can let you know the status of that person.
All right, Mr. King?
Okay. Yeah, you partially answered this question.
Okay, strong.
Let me just comment before I ask another question. One of the complaints you used to get is that the owners